Welcome back to the Investor's Library. We're just 2 days away from 2025, right?
Crazy how fast this year's gone.
Yeah. And to get ready for the new year, we thought, what better way than to go back to the basics with Warren Buffett?
Yeah, he's always a good one to revisit.
We've been deep diving into his biography, The Snowball. Have you ever read it?
Oh yeah, great book. I love how it shows a different side of him.
It really does. Even if you think you know Buffett's story, this book gives you a whole new perspective on him. It's not all about stocks and investments.
And it's those little personal details that make it so interesting.
Exactly. Like, did you know he didn't even own a VCR?
No way. Really?
Yeah, the guy who's worth billions, avoiding technology like that.
Uh-huh. I guess he had other priorities.
And his diet. Hamburgers and pork chops. You wouldn't exactly picture a billionaire eating like that.
I guess it shows you that money doesn't change everything.
But here's the thing. These little details, they actually tell us a lot about his investment philosophy.
I see what you mean. Like his simple lifestyle kind of reflects his long-term approach to investing.
Exactly. He's all about consistency, patience, not getting caught up in fads, just like his personal life.
Makes sense. It's not about getting rich quick with him. It's slow and steady growth, just like how he lives his life.
And you see these same qualities reflected in his childhood, too. The book goes into some of those early experiences.
Yeah.
Like there's this one story about how he got kicked out of a golf course for selling used golf balls.
Wait, what?
Yeah, as a kid. Can you imagine?
Talk about starting young.
I know, right? But his parents, they didn't see it as a bad thing. They saw it as ambition.
That's really cool. Shows you the kind of environment he grew up in.
And then, of course, there are the lessons he learned from his family's grocery business. His dad, he taught him all about customer service. Happy customers come back for more.
Yeah, that's a timeless principle right there.
Absolutely. And his grandfather, he was all about knowing the details of a deal. Do your homework before you commit to anything.
Those are such valuable lessons, especially for investors in today's market. Things might move faster now, but the fundamentals are still the same.
Totally. It's all about doing your research, understanding the risks, and looking for long-term value.
And speaking of doing things differently, one of the things that really stands out in the Snowball is how Buffett often went against the crowd. He was a contrarian investor right from the start.
Oh, yeah, definitely. Remember the dot-com bubble? Everyone was going crazy for tech stocks.
Oh, yeah. It was like the Wild West out there.
But Buffett, he held back. He wasn't buying into the hype.
Those probably took a lot of guts at the time, right?
It must have. I mean, everyone else was making a killing.
Yeah.
But he stuck to his principles and ended up doing pretty well in the long run.
It's a good lesson for us too, right? Don't just follow the herd.
Exactly. Sometimes it pays to be a little bit contrarian as long as you've done your research and you believe in your analysis.
And then there's that classic story of how he bought Berkshire Hathaway, the struggling textile mill.
Everyone thought he was nuts, but he saw something that others didn't.
He was looking at the long game, wasn't he?
Exactly. He saw an opportunity to acquire a solid platform for future growth. And it worked out pretty well for him.
It makes you wonder how we can learn to spot those hidden gems too, those undervalued assets that everyone else is overlooking.
Right. Like, what are the signs? What should we be looking for?
Well, the book offers some clues, I think. Buffett, he wasn't just lucky. He did his homework. He understood the businesses he invested in, inside and out.
He really did. And he wasn't swayed by hype or short-term market fluctuations. He was in it for the long haul, always focused on the bigger picture.
Exactly. That's such a powerful lesson for us heading into 2025, right?
Absolutely. Don't get swept up in all the noise.
Yeah.
Do your research and look for companies with solid fundamentals and a long-term vision.
It's funny. It's almost like he's saying, don't just follow the crowd. Forge your own path based on solid research and a clear understanding of the market.
I like that. Forge your own path. And that brings us to another key concept that Buffett really emphasizes, building a circle of competence.
Oh, yeah. That's a big one. He always talks about how you should only invest in what you understand.
It's about knowing your limits, right?
Yeah, and not just sticking to familiar industries either. It's about constantly learning and expanding your knowledge base.
The book actually shows how he spent years immersing himself in all sorts of different sectors. Insurance, retail, manufacturing, you name it.
He was like a sponge soaking up information about all these different businesses.
And it wasn't just about memorizing facts and figures. He wanted to understand the nuances, the underlying dynamics of each industry.
So he could spot the opportunities that others might miss.
Exactly. And the book tells this amazing story about how he even predicted how the internet would impact the auto insurance industry.
Seriously. Years before it actually happened. That's incredible.
It is. And it really highlights the point that Building a circle of competence isn't just about what you know today. It's about anticipating future trends, understanding how the world is changing, and positioning yourself to capitalize on those changes.
So we need to be adaptable. We need to keep learning and growing as investors.
Absolutely. And this brings us to another really crucial aspect of Buffett's approach, something that a lot of people, I think, struggle with. The power of saying no.
Oh, that's a tough one.
It is. But the book reveals that Buffett walked away from countless deals, even those recommended by his close friend and partner, Charlie Munger.
He was willing to pass up potentially lucrative opportunities.
If they didn't fit within his circle of competence or his overall investment strategy, he walked away.
Wow, that takes discipline. I think a lot of us would struggle with that, especially when you see others making money.
You get that fear of missing out, right?
Totally. But Buffett's example shows that sometimes the best investment is the one you don't make. So true. And this is a perfect lesson for all of us heading into 2025. It's not just about finding the next big thing. It's about having the discipline to say no to anything that doesn't align with your investment goals and risk tolerance.
Absolutely, sticking to your guns.
Exactly. Now, another theme that really comes through in the Snowball is the importance of reputation.
Yeah, that's something Buffett has always emphasized, hasn't he?
He has. He's built his entire career on integrity and ethical behavior. And it's not just about doing the right thing. It's about understanding that your reputation is a long-term asset, often even more valuable than any short-term gains.
Right. Your reputation is everything.
And the book really drives this point home with the Salomon Brothers incident.
Oh, yeah, that was a big one.
It was. Remember, Salomon Brothers, this major investment bank, got caught up in a trading scandal?
I vaguely remember it. What happened again?
So they were involved in this whole treasury bond trading scandal, and Buffett, as a major shareholder and board member, he was right in the thick of it.
It was. He was thrown right into this firestorm. But what's amazing is that he didn't try to sweep it under the rug.
He faced it head on.
He did. He stepped in as the interim CEO, and he had to navigate all these legal and ethical challenges.
That must have been incredibly stressful.
It was. He had to make some really tough decisions, some that even cost him friendships on Wall Street. But he ultimately helped to save the company's reputation.
Wow, that's pretty amazing.
It is. And his testimony before Congress was a masterclass in accountability and transparency. He admitted the firm's mistakes, he took ownership, and ultimately helped restore confidence in Salomon.
He didn't just point fingers or try to shift the blame.
No, he didn't. And I think that's a really important reminder for all of us, not just in investing, but in life. Integrity matters.
It really does. You can't just talk about it. You have to live it, especially when the going gets tough.
Exactly. And that's something we can all apply to our investment decisions, too. We should look for companies with leaders who demonstrate ethical behavior and a commitment to transparency.
Those are the businesses that tend to weather the storms and build long-term value.
Exactly. It's about more than just the numbers. It's about the people behind those numbers and the values they bring to the table.
So, we were talking about how Buffett often sees potential where others just see problems, right?
Yeah, like with Berkshire Hathaway.
Yeah.
Buying a failing textile mill. Most people would run the other way.
But remember, he wasn't just buying the business itself. He was acquiring a system, a platform.
Oh, I see.
He saw Berkshire Hathaway as a way to access capital,
Yeah.
money that he could then use to invest in other more promising ventures.
But that's actually pretty clever, using one investment to fuel others.
And that long-term vision is something we can all learn from, right? He wasn't thinking about quick profits. He was playing the long game.
And speaking of long-term vision, the book also talks about how he managed those early investment partnerships. He was super transparent with his partners, setting realistic expectations and emphasizing that short-term market dips, they were insignificant in the grand scheme of things.
He didn't want them to panic over every little bump in the road.
Exactly. He wanted them to focus on the big picture. He even gave them a chance to back out in 1969.
Yeah.
Right before the market was about to take a hit.
Really?
Yeah, he knew it was coming, but he didn't want his partners to feel trapped.
That's pretty amazing. He was putting their interests ahead of his own potential profits.
It shows you the kind of guy he is. Integrity and honesty are so important when you're dealing with other people's money.
Absolutely. And I think that's something that's often overlooked in the investing world. You need to find someone you can trust, someone who shares your vision.
Someone who's in it for the right reason.
Exactly. Now, on a slightly different note, the book also delves into Buffett's personal life during this period. His marriage to Susie, their growing family. It's interesting to see how he balanced work and family life.
I bet that wasn't always easy. especially with his intense work ethic.
It wasn't. The book doesn't shy away from the fact that he was often consumed by his work, sometimes to the detriment of his personal life.
Well, nobody's perfect, right? I think it makes him seem more human to know that he struggled with these things too.
I agree. It's those imperfections that make him relatable. It shows that even someone as successful as Buffett faced challenges in his personal life.
It makes his achievements even more impressive,
Yeah,
right? Because he didn't have it all figured out from day one.
exactly. And one of the things that really struck me about Buffett was his ability to stay calm and rational, even when everyone else was freaking out. Like during the bear market of the 1970s, so many investors were panicking, selling off their assets.
Oh yeah, that was a tough time for a lot of people.
It was. But Buffett, he saw it as a buying opportunity. He wasn't afraid to go against the crowd.
So he was buying when everyone else was selling. That takes guts.
It does. But it goes back to his fundamental belief in the resilience of the market. He knew that things would eventually turn around.
It's about having that long-term perspective, isn't it? Not letting your emotions get the better of you.
Exactly. And that's such a crucial lesson for us as we think about investing in 2025. There are always going to be ups and downs in the market.
But it's important to stick to your plan and not get spooked by every little blip.
Now, moving into the 1980s, we see Buffett's investment approach continuing to evolve. He started making larger acquisitions. Companies like Nebraska Furniture Mart.
I've heard of them. They're pretty big, right?
They are. But what's interesting is that Buffett wasn't just buying companies based on their size or their current profits. He was looking for something more.
So what was it about Nebraska Furniture Mart that caught his eye?
He was becoming more and more interested in businesses that had what he called moats.
Moats. Like a castle.
Exactly. He's talking about companies that have strong competitive advantages, something that makes them difficult to replicate and allows them to withstand competition over the long term.
Okay, I get it. So it's like they have a protective barrier around their business, making it harder for others to attack them.
Exactly. Think about companies like Apple or Coca-Cola. They've built these incredibly strong brands and customer loyalty that are almost impossible to duplicate.
Those are definitely companies that have stood the test of time. They've weathered all sorts of economic storms.
And that's what Buffett was looking for. Businesses that could deliver consistent value over time, regardless of what was happening in the broader market.
So how do we apply this moat concept to our own investment strategies today?
It's all about identifying companies that have something unique, something that sets them apart from the competition. It could be a unique product or service, a loyal customer base, a strong brand reputation, or even a cost advantage.
So we're not just looking for a good product or a good price. We're looking for companies that have a real edge in the market.
Right. It's about finding those businesses that can sustain their success over the long term. Now, the 1980s was also when Buffett started to become more of a public figure. He was giving speeches, sharing his investment wisdom with a wider audience.
Yeah, he was becoming more than just an investor. He was becoming a thought leader, a guru.
And one of the key themes that he always emphasized was the importance of integrity in business. Remember his famous quote, "It takes 20 years to build a reputation and 5 minutes to ruin it."
Oh yeah, that's a classic. And
Okay.
it's so true, especially in today's world where information spreads like wildfire.
Exactly. Your reputation can be damaged in an instant. So it's
Yeah.
more important than ever to choose companies that are not just profitable, but also operate with integrity and transparency.
It's about doing the right thing, even when nobody's watching.
Now, the 1980s also saw Buffett getting more involved in corporate governance. He was on the board of directors at the Washington Post Company. Remember that?
Oh yeah. The media landscape was changing so rapidly back then.
It was. And Buffett's insights were really valuable during that time. They weren't just looking to him for his financial expertise, but also for his strategic thinking and his ethical compass.
It's like he was applying his investment principles to help guide a major media company through a period of massive disruption.
He was looking beyond just the numbers. He was thinking about the long-term sustainability of the business, the impact on its employees and its readers.
So he wasn't just managing money, he was helping to shape the future of a company, an entire industry even.
And that brings us to a really pivotal moment in his career. The Salomon Brothers crisis. This was a defining moment for Buffett. It really put his values to the test.
Yeah, we talked about that a little bit earlier, but I'd love to hear more about what happened. It sounds like a pretty dramatic story.
It was. It's a story of risk, reputation, and staying true to your principles even under immense pressure. So we were talking about the Salomon Brothers crisis, that whole treasury bond trading scandal.
Yeah, it sounded like a real mess.
Oh, it was. The Snowball really goes into detail about how Buffett had to step in as interim CEO and handle all those legal and ethical issues. I mean, he had to make some really tough choices. Some of them even alienated some of his friends on Wall Street.
Wow, so he was really putting his neck on the line.
He was. But what's incredible is that he put Salamon's long-term survival and their reputation above everything else, even if it meant some short-term financial setbacks.
He knew that if they lost people's trust, it would be game over.
Exactly. Rebuilding that trust with investors and the public was absolutely crucial. And his testimony before Congress, you should read it. It's amazing.
What was so special about it?
He didn't try to downplay what happened or make excuses. He owned up to the firm's mistakes.
So he took responsibility.
He did, and it was powerful. It showed real leadership. And you know what? It actually helped restore confidence in Salomon.
I guess actions speak louder than words sometimes.
They do. And it's a good reminder that integrity isn't just some corporate buzzword. It's about taking responsibility for your actions even when it's hard.
So it's a lesson for investors, too.
Oh, absolutely. Look for companies that are led by people who act with integrity, people who are transparent and accountable.
Because those are the businesses that are more likely to build long-term value.
Yeah, exactly. So moving on from the Salomon crisis, the book also talks about some of Buffett's later investments, like his big stake in Coca-Cola.
Oh, yeah, that was a huge deal.
It was. And, it was kind of different from his earlier investments. It was almost like he was recognizing the power of strong brands in a new way.
You're right. He always talks about value investing, but Coca-Cola, it's all about the brand.
Exactly. He saw that global reach, their enduring appeal, the potential for growth. He understood that a brand like that, it can transcend market fluctuations.
And it shows that he wasn't afraid to adapt and evolve his investment approach. He wasn't stuck in the past. He was willing to learn and try new things.
I think that's a great lesson for all of us. The world's constantly changing, so we need to be flexible as investors if we want to keep up. The Snowball also gives us a glimpse into his personal life during this later stage of his career, his relationship with Susie, his partnership with Astrid.
It's always interesting to see that side of things, the personal stories behind these larger-than-life figures.
It reminds us that even someone like Warren Buffett, with all his success, he's still a human being. He has his own personal challenges and relationships, just like everyone else.
And towards the end of the Snowball, we see Buffett starting to think about his legacy and the whole question of succession. You know who's going to take over Berkshire Hathaway after he's gone?
Yeah, he was laying the groundwork for the future, making sure that the company would continue to thrive, even without him at the helm.
And of course, there's that incredible decision to donate the majority of his wealth to the Bill and Melinda Gates Foundation.
That was a game changer for philanthropy.
It really was. It shows that he wasn't just focused on building wealth for himself. He wanted to make a difference in the world.
It's a powerful example for all of us. We can all use our resources to make a positive impact, whether it's through investing or philanthropy.
So as we wrap up this deep dive into the Snowball,
Yeah.
what are some of the key takeaways that we can apply to our own investment journeys as we head into 2025?
I think the biggest one for me is that investing, it's not just about picking stocks or maximizing returns. It's about having a philosophy, a set of principles that guide your decisions. It's about having a long-term vision, staying disciplined, and focusing on businesses that create real value for the world.
And it's about integrity, transparency, and building a reputation for ethical behavior. Because at the end of the day, it's not just about the money, it's about making a positive impact.
Well said.
Thanks for joining us for this special New Year's Eve deep dive into the life and lessons of Warren Buffett here on the Investors Library. We hope you found it helpful and insightful as you prepare for the investment opportunities and challenges that 2025 will bring. Happy investing and Happy New Year.